become commerce costing methods, treatment of process loss presented by E.K. Mekla. Unit 3 process costing, treatment of process gains. Treatment of process gains. In this case, whenever the actual loss is less than the normal loss, then that is considered as process gains. When process loss is less than the predetermined loss, that is called a normal loss. When the additional output resulting therefrom is the abnormal gain or abnormal effectiveness. Abnormal gain can occur because of superior quality material, better workmanship, improved method, and improved tools and equipment, etc. As a result, part of a cost control process, the causes for abnormal effectiveness should also be investigated. Where it is warranted, the normal loss percentage can be revised for future operations. Because due to some mistake, they might have considered the normal loss to be uh, less. So in that case, the abnormal gain occurs. So how to compute the abnormal gain? Abnormal gain is nothing but the abnormal output minus actual output. How to calculate the normal output? Normal output is input minus normal loss. If actual output is more than, then the balance is negative figure representing abnormal gain in units. Normal cost of normal output is expenditure of the process minus the value of normal loss. Then in this case we shall see how the accounting treatment of abnormal gain is done. The units of abnormal gain and the value are both debited to the process account concerned in the respective columns. A separate account is opened in the cost ledger for abnormal gain. The account is credited with units and the value of abnormal gains in different processes. It is debited with the loss in scrap value of normal loss, which did not happen because of the occurrence of abnormal gain. The balance of the account is transferred to costing process and loss account. So in this case, we shall see how to work out a problem based on the abnormal gain. Product passes through three stages of production. There are three stages in the production of the product, that is M, N and O. The details of expenses incurred during the year are as given below. Particulars: M units. How many units are issued? 10,000 units are issued. N, nothing is issued. O is nothing issued. While producing O, nothing is issued. In the process of O, nothing, no material is issued. And at the starting of the process, first process itself, most of the units will be issued. Occasionally, sometimes in some processes, uh, uh, in between processes, materials may be issued. So normally, units will be issued, raw material units will be issued for the starting process only. In this production manufacturing unit, three processes are getting involved: M, N and O. So for the first process, that is for M, the 10,000 materials have been issued, and for each and every product the company is spending 100 rupees. Then for the process M, materials have been issued at rupees 10,000, and for M it is 15,000, and for 4 it is 5,000. In the same way, for the process M, wages are 36,000, for N that is 98,150, and for O 92,200. In the same way, selling price per unit of M, it is 120 rupees, and for N, selling price per unit of output, that is 165, and the finished good O, in the process O, the selling price of output per unit is taken considered as rupees 250. Now for this we have to Along with that, the company has given some other details like management expenses incurred during the year rupees 80,000 and selling expenses were 50,000, and these are not allocable to the processes. Actual output of the three processes was process M 9,300 units, and then process N 5,400 units, and process O 2,100 units. Out of this, two-thirds of the output of process M and one half of the output of process N was passed on to the next process. In the sense, two-thirds of the output of M is transferred to N, and half of the output of N is transferred to O, and the balance is sold. The normal loss of three processes calculated on the input of every process, that is, it's nothing but the normal loss in each and every process. For M it is 5%, and for N it is 15%, and for O it is 20%. The loss of process of M was sold rupees 2 per unit, and that of process N is rupees 10 per unit. And we have to prepare, the company has asked us to prepare the process account and profit and loss account. So in this case, we have to prepare three processes, that is M, N and O, and along with that we have to write one more account called profit and loss account. First we shall open the process account. In the process account M, we have to open three processes, M, N and O. M process M, first we have to start with the materials issued to the particular process. So how many units are issued? 10,000 units multiplied by rupees 10. We get here 10 lakhs. And then two materials. This one is apart from the two wages, and then to materials. Materials have been issued to the extent 10,000, and then to the wages 36,000. So then normal loss is given as in this problem. Normal loss is given in the problem as 5%. So 5% for 10,000 and 5% is 500 units, and then one is passed rupees 2. So 500 into 2,000, and then we shall go with the next process. So out of the total units, we have to see the process N account. 2/3 of the units are sold, that is 6,200. Calculated, we get, multiplied by 110, we get 6,82,000. Then we have to calculate the abnormal loss. Then we get 200 units. For that, when we calculate 200 into 110, we get 22,000. So the rest goes to the profit and loss account. That is 3,100. That is 3,41,000. Then next is process N account. So from the process M, we get 6,200 units or transfer to process N account. When you multiply by 110, we get 6,82,000. Then materials are given as 130, that is multiplied by 15,000. Then wages in the problem is given as 98,150. Then here we get the loss, that is how many percentage is given as this pay. 15% is given, so that is 930, and then it is sold at the rupees so 930 we get 4,650. Then we get the units which are transferred to the next process, that is process O, is nothing but the half of the process are sent to the next process, that is how many units are produced. 5,400. Out of the 5,400, 2,700 units are transferred. So when we multiply that, we get 4,05,000. Then the rest goes to so equally that should be considered, that is 5,400 divided by 2, we get 2,700. So 4,05,000, again 4,05,000 in the profit and loss account and then process N account. Then the difference should be transferred to the abnormal gain account, that is 19,500 at rupees 150 each. We have to calculate that. Then in the same way we have to write the one more account, that is from the process N account we get 2,700, that is 4,05,000. Then to materials is given in the problem itself 5,000. To wages is given as 92,200. Then next we have in the problem itself it is given 20% is considered as the normal loss, so that is 540, that is 5,400. Then profit and loss account, here half balance is transferred to the finished goods account, so that is considered as profit and loss account, that is 2,100, that is 4,83,000. Then the units, difference units is treated as the 60 units, that is 2,400, 2,700 minus 540 minus 2,100, we get 60, which is transferred to abnormal loss account. When we divide that amount, that is 13,800 divided by 60, we get 230. So that way we have to calculate this abnormal loss account at the rate per unit. Then we have to write one more account, that is profit and loss account. Whichever in process M account, in process N account and process O account, wherever we mentioned as profit and whether it is wherever we credited or debited profit and loss account, that should be transferred to profit and loss account, that should be considered. So when we open the profit and loss account, we go to the process M account. Process M account is credited. Process M account is credited. Process M account is credited to the extent of 3,41,000. Process N account is credited 4,05,000 units, 5,000 rupees, and process O account is credited 4,83,000. Apart from that, there are some expenses like management expense 80,000 and then selling expenses 50,000. Then the total says 3,100 is sold at the rate of 3,72,000. How we, apart from that, we get from M, N and O, we get this is to be added up, that is 3,100 for M, 2,700 for N, and O 2,100. So put together we have to write separately. We have to write the for M, that is 3,72,000 for N, 4,45,500 for O, 2,100 units at the for rupees 5,25,000. So the company incurs a net loss to the extent of 16,500. So we can refer this for further. We can refer this text for further clarity.